Let's go into some weekly stats here. If you look at active residential listings, we are at 9,421 active listings. We got 9,421 active homes currently on the market. We are up 2.05% daily, up 2.93% weekly, up 3.80% month over month. There are 4,884 pending properties in the MLS. The activity index for the entire MLS right now, 33.77, a little bit less than over the past 3 days. Months of inventory, 5.18 months of inventory. On the new listing to pending ratio, oh, look at that, you all. Are we about to see that increase in inventory that we've been anticipating? 1,061 new listings hit the market from February 27th to March 6th. Ratio 0.74 ratio. It's a net increase of 345. On the monthly side, look at this number. For the entire month of March so far, 1,286 new listings. Pendings, 352 pendings, a total of 877. And that ratio is 0.57 so far for the month of March. It's only March 10th, so I expect this ratio to go up. If rates stay steady on the downward trend and we start seeing these 6.25 back and people are excited, they take advantage of these amazing prices, guarantee you pendings are going to skyrocket. This ratio is going to pop back up. If Tuesday's CPI numbers come in hotter than expected, rates are going to go up, demand's going to flatten, this number is going to stay flat, and it'll be a really bad ratio. As a matter of fact, it'll be the second worst ratio. Worst one, 0.48, going all the way back to 2003. But it'll be the worst ratio in 20 years. Let's keep on going and let's take a look at market cycle. What do you think? Are prices going up for the month of March or going down? A massive 9.8 month over month increase for the month of March. On the median side, a massive 6.3% month over month increase. And we spoke about this when looking at this chart, is that we've only had 2 Marches going all the way back to the year 2000 that went negative month over month. And those 2 Marches that went negative month over month had a previous February that went positive. Well, we had a negative February, a negative 4.7. So the likelihood of us having a positive March is there. And as you can see, it's 9.8. So the big question is, do we have enough time left in the month of March to reduce that 9.8 to a negative? And I'd say statistically, we don't. Statistically, we're going to end up positive for the month of March. Where are we going to end up positive? I'd say right within the average and the median, 3.5%. That's my personal prediction on where we're going to end up for the month of March. Take a look at the number of sold properties. We continue to see that downtrend. We can see that the market peaked in 2020 on the number of sold properties. The actual peak was July of 2020 at 4,531 homes. The projected number of closed properties for this month is 1,713. When you look at the actual month of March, we are expecting a 48.4% drop on the number of sold properties compared to March of 2022. When you look at the number of sold properties and you take the population into account, because we can't go all the way back and say, oh, wow, 1713 sold, and well, that's sure better than 2009, which is true, but we had less people living in the area in 2009. So what I do is I divide the number of sold properties by the population, going all the way back to January of 2000. And then I multiply it by 10,000 so we can get a ratio. In the anticipated ratio for the month of March is 0.69. That would put us a little bit less than March of 2009 at 0.87. That gives us the ability to compare apples to apples. It's not a little bit less. It's actually a lot less. So we're expecting a 49.5% decrease in that ratio, number of sold properties divided by the population. Now, year over year, we're still negative. We're negative 9.5 on the average sold price. We're negative 11.1 on the median price. We can see this little bump right here. So between May 2022, when the market peaked at 681,952, to March 2023 at 585,148, The market is down 14.2%, $97,000 on the average side, 15.91% on the median side. So when you see that rates have gone up, prices have actually gone up in the month of March, what happens to affordability? Well, affordability goes down, meaning your monthly mortgage payment, PITI, principal, interest, tax, insurance, using the median sold price, currently at $462,500, with 20% down, using the 30-year mortgage rate of 6.72. That's what we get. We get a PITI of $3,524. That is an annual gain of 6.88%. Now, that's a drop of 6.45% when you look at the peak of the market in May 2020, but year over year, affordability is down, meaning PITI is up. Now, when you take the median sold price and you divide that by the household income in the area, you get this median sold price to income ratio. And you can see that the peak of the market had a ratio of 6.63. The ratio right now is 5.48. In March 2020, pre-pandemic, the ratio was 4.14. So that ratio has gone up 60.16% from pre-pandemic all the way to market peak. Market peaked, when you look at this ratio, April 2022 at 6.63. That's a 60.16% increase. That ratio has gone down by 17.33%. We saw that little bump right there. Why? Well, because the price went up. Really fascinating to see looking at this. Now, what I want to do is I want to show you let me show you the sold to list price ratio, because we can see a bump right here on the number of properties that are selling over list price. We're at about 15% of the properties selling over list price. That has gone up. Right there, exactly 15% of the properties selling over list price. It bottomed out January 2023 at 9.9%. It's at 15% right now, selling over list price. This goes back to the tale of two markets. If the property looks good, smells good, feels good, the buyer can walk in, they can place themselves in that home, it's priced right, you've done everything right. Yeah, we've got properties going over list price. Now, if you look at the type of market, 17 out of the 30 cities in Central Texas are in a seller's market, 8 neutral market, 5 in a buyer's market. This number is increasing, the number of properties in a neutral and in a buyer's market. On the zip code side of things, take a look at this. 63% of the 75 zip codes in Central Texas, or 47 of those zip codes, are in a seller's market, 24% in a neutral market, 13 in a buyer's market. What I want to share with you right now is let me go into the actual residential inventory. Inventory is up 165.7% year over year. We're at 9,555. Number of pending listings. Here's a little bit of a bump on the pending listings. February was tough. At 3674, we're at 3705. That is a 32.2% drop year over year. Here are the number of active listings in the city of Austin. We're at 2514. That's 152% year over year. Number of pending listings in the city of Austin, 1211. That is a 34.9% drop year over year. Average days to sell, look at that improvement right there. We actually improved it. We're at 69 average days to sell. Median days to sell, same thing. There's that improvement. So the big question is, does that mean that the market bottomed out in February and we're going back to normal? Number of new listings, 5,580 new listings. Take a look at this. We are noticing an increase in the number of new listings. A 20.5% increase. Is this that inventory increase that we've been counting on? New listings, City of Austin, same thing, a 21.1% increase on the number of new listings, City of Austin. And yet, the number of sales are down 55.6% in the MLS, City of Austin 59.9%. Last month, 660 properties sold in the City of Austin. Months of inventory, 4.7 in the entire Austin MLS. City of Austin, 4.08. Let's take a look at pricing. Average list price in the entire MLS, record high, 751,710. In the city of Austin, once again, crossed the $1 million mark. You just cannot make this stuff up. The average list price yesterday in the city of Austin, $1,017,444. The median list price in the MLS, 518, that's down year over year. The median list price in the city of Austin is flat. The average sold price in the Austin MLS, big month over month bump. Take a look at the detailed chart. We're at 7.4% month over month bump, but we're at 11.2% year over year. There's that divergence right there. Year over year, we're down double digit. Month over month, we're up 7.4%. What about the city of Austin? Same thing. Month over month, we're up 7.2%. Year over year, we're down 7.7%. On the median sold price, we're at $439, so the monthly is not as much. That's at 3.3% month over month for the Austin MLS. The median sold price year over year down 13.1%. Median sold price city of Austin, a massive return to normal bump of 13.2%. 13.2% month over month increase in the city of Austin. The median sold price $625,000. Keep in mind, we're only 10 days into the month. That's why I don't pull stats before the 7th day of the month, because this can be very deceptive. But it's still an impressive number. We're down 3.5% year over year. On the average sold price per foot, we are up 6.3% month over month. For the city of Austin, we are up 3.6%.